Hey everyone, this is Dan with Theta Trend. Today is Tuesday, February 2nd, 2016. It's about 2:20 p.m. or so. The market closed 15 minutes ago. What we're taking a look at today is a chart of the Russell 2000. This is the daily chart, and we can see the market closed here at 1008 and some change, down 2.25%-ish. The market basically sold off quite a bit today. We were getting this little rally up and out of this consolidation area, and from there we failed, and we've pulled back into the body of the March CIB. So these bright lines represent the expiration break-evens at various points in the trade. We started up here at 1040 and let's see, where was that? Around 960 or so. We rolled the position lower, and that was the dark blue line. Then we moved it slightly higher, which is the brighter blue, and then the lightest color blue is our current position, where the expiration break-even is up around 1045-ish, and the lower one is down somewhere around 957 or so, something like that. But we can see the market pulled back. It's in the kind of in the upper third or so of the butterfly at this point, so there's really nothing to be concerned about, and the position looks good. We'll take a look at that in just a second. One thing I wanted to point out is that I watched the volatility ratio, and what I'm watching is the VIX to the VXV ratio, and that's this purple line right here. And this green line is just a simple moving average of that for the past 10 days. And this yellow line here is 0.92, and the blue line here is 1.0. So when the purple line, the VIX VXV, is trading above this blue line, the 1.0, it means that the 30-day at the money implied volatility is trading with a premium to the 3-month. And what we saw today is we saw that this indicator really ticked back up with the downturn in the markets, and the S&P was off as well. Let's see how much it was off. I forget offhand. It was off 1.87%. So the same type of action that we saw in the Russell 2000, and it came right up here and touched this box that we've been watching for the S&P. But let's jump back over to the RUT, because that's what we're talking about right now. But so this is just something to be aware of. We're seeing this volatility ratio tick back up. We're in a generally bearish environment. We have declining simple moving averages. For the time being, what it really looks like is it looks like we got rejected at a declining 20-day simple moving average, at least on the daily chart. Whether or not we have more follow through or not, I don't know. We'll have to wait and see. Let's go down to the 65-minute time frame. So in the 65-minute time frame, we've been watching this area of consolidation kind of up to about 1035 and down here around 985 or so. And we saw the market come up to test this level, up in the low 1030s last Friday, and then it pushed up and through and then failed from there and sold off lower. Today was just basically a steady down day. All day long. But at the same time, on the downside, we really haven't violated some of these key levels. We have this level here, let's call it, that's about 1,000-ish, 995. So sort of in this 995 to 1,000 area is where we're watching. If the market breaks that level, it wouldn't be surprising to see it end up down here, sort of in the 985-ish, testing the lower end of this box. And failure there could potentially take it lower back to retest the lows. It's too early to say what will happen, but we're just kind of chopping around right now, and there's no reason to believe that we're going to be heading lower. But if we start breaking some of these bigger levels, like the 995 to 1,000, there's reason for concern. For now, let's jump over here. This is a position of the March Core Income Butterfly, the CIB, and this trade is currently made up of 3 butterflies and 2 long calls. So the 97 IWM call and also the 101. And then there are 3 butterflies. One is centered at 980, and that's a 55-point wide balanced butterfly. At 1,000, we have a butterfly that's 55 points wide on the downside and 50 on the upside, so it's slightly unbalanced. And then a balanced butterfly up here at 1020, and we added this one just yesterday, in fact, Monday, when the market was trading up around that 1035 level. So we're pushing up through here. This was an adjustment point. We put on the 1020 butterfly to give us a little more room to run on the upside, and it turns out that we didn't need it, at least for today, and the market pulled back lower. So as of the close today, what we see, the market is sitting here at about 1,008, and our delta is -1, gamma is -27, theta's it's almost $29, $28.85 right now. Vegas -96, and the open profit on the position is about $76, including all adjustments. So we're in good shape. With these three butterflies, you can see the one here at 980, 1000, 1020. If we trade a little bit lower, say down into kind of this 990-ish, 985 level, I'm going to be looking to take off this 1020 butterfly. But for the time being, it's fine. It's just going to sit here. And as this profit and loss line continues to rise, we may make some other adjustments. We may do a reverse Harvey, do something like that to cut down the risk on either side of the butterfly. But for now, we need to just sort of let the position work and let the trade come up a little bit of money. And the good news is that we're getting closer to expiration. I think we're inside of 45 days, or at 44 days to expiration. So the T+0 line, this line right here, is going to begin to tick up and show some profit. If we go forward just to Friday or so, this gives us an idea kind of what we're looking at as of Friday. So we're looking at a little bit of a wider range on Friday, and that's good. That's what we want to see, just the trade moving along. But that's all I have for today. The position's fine. It's sitting there. It's healthy. And if you have any questions, feel free to send me an email, info@thetatrend.com. Thanks for watching.